How to trade volatility in forex. Pete, you've been doing this for a number of years, but every year it seems like probably since you've started, you've gained more and more tools to how you actually are measuring what it is you're doing in these markets. Because at the end of the day, going back to your first days of trading currency futures or whatever, you're trading price. You are trading volatility at the end of the day, no matter what your function is. Because if the price was one price and there was no volatility, there was no deviation of prices in the forex market between euro and dollar and Canadian dollar, there'd be nothing to do there, right? And so going back to your earliest days, you're always trading volatility, but today we're putting some new tools around it.
And again, we had little point and figure charts we actually did manually in the pit, and you did see guys starting to come in with looking at running volatility reports, not just the price options on underlyings, but looking at that. Smart guys are figuring out, again, let the statistical edge come from the performance of the product. And what I mean by it, the attribution, the dynamic nature or volatility of the product at that time.
Yeah.
Those guys were early adopters of what we look at as essential tools to do anything for clarity.
And now it's interesting because you have so many. It's funny because I wonder, just as a quick aside, if back in that time, since there were so few people in that market, even global, Forex, right, huge global market, but even globally, I mean, we're maybe talking about thousands of people,
maybe
like across tens or 100 institutions. Right. And now, obviously, it's bigger. Everything is bigger, more people, yada, yada, yada. I would imagine at that time, so many people were using relatively similar, the same tools, right, that certain prices would kind of hold until they didn't, obviously, right, and there were huge crashes. Now, there are so many. I mean, every platform has 30 technical indicators. Right. Everybody is selling, I've got this AI bot that is doing this. And so there's so many.
Once.
The AI agents in crypto that you love. There's so many different tools now that, if anything, it might be, one, it's a more liquid space, and two, maybe there's even more edge because not everybody is using the same stuff. But I do want to get to something that is really core to almost anything, because, again, volatility is the name of the game. We talked about the most volatile pairs in an earlier episode, but I just wanted to bring this back just to show the most classic way that everybody universally measures volatility. Wow. Is with the historical volatility number, the percentages that you're seeing here, or an implied volatility number, percentages that are derived from options markets. And what this number essentially tells you is, you're looking at dollar peso up there at 17.3%, is given historical prices, this market is expected to move 17.3% on an annual basis, plus or minus, in the next year, given historical prices. But that comes with a 68% confidence interval. And so it's saying essentially, okay, let's look at the last 30 days of data. And the last 30 days of data would tell us that there's about a 68% chance that dollar peso in the year moving forward is within a plus or minus 17.3% range. Now, of course, there's a range outside of that. There's potential range outside of that, and so on. And all of these things look like this standard distribution here. At the end of the day, you have 2 sigma moves. This is what people are talking about. 3 sigma moves. A market that crashes either up or down outside of that 68% interval. But for you and me, Pete, we use that one standard deviation. A lot of options traders use it. Scalpers. Again, it's so core to so many Bollinger Bands, all these different things.
What's great about this as a trader, especially a product indifferent trader like we are at Tasty, how can I take, I'm a euro dollar trader,
sure,
euro FX trader. 35 pips is my range. It works for me. That's where I look for my extremes. I go to another product that has either lower or higher volatility. Do I take that 35 pip scalping strategy? Well, if you take that into a market that has twice the volatility, that's not going to be a very productive strategy. This is a tool that lets you normalize that comfort level around that 35 points to either a more volatile environment or a less volatile environment. It's a really powerful tool to give you that same input, but across any product you choose.
And I'm sure, again, you alluded to guys back in the trading pits that were
we
starting
figured
to
this
do,
out the hard way.
But I was going to say, you would figure this out by, like, it would
By
be
getting run over for 3 days.
well, but also years of experience of being like, that euro dollar market moves around 10% every year. That Aussie dollar market moves around 15% per year. What does that mean on a daily basis? And then, when the market changes from this year to next year, you get run over day after day after day, or you don't trade for a week because you're out here and the market is actually less volatile. Whereas now, all these things are computed in real time. Every platform has standard deviation functions and everything else. And we have the numbers here for you from one market to the other. Again, these are some of the most volatile markets in forex for the last several months of trading here.
That's a great Canada number.
Yeah, and I wanted to dive into that dollar CAD number. And again, just really quickly, so what we did here is exactly what Pete just kind of highlighted, which is like, okay, the percentage number is great, but I'm not waiting. It's not like, oh, it's January 1st of 2025. I'm going to just watch this dollar CAD market, and the minute that it gets outside of 9% to the downside or the upside, I'm just going to go all in, and that's going to be my trade. We bring it down into the daily here. What is the daily standard deviation? And we did it in terms of points in these different markets. And yeah, to your point, Pete, I mean, dollar CAD, a lot of years can be one of the least volatile markets out there, moving right now about 80 points in a given day. And here I'll just lay it on top of the standard deviation chart here, the normal distribution, sorry. And so what we use with this 68%, this one standard deviation, and you can see here it's plus 80 points on a given day or minus 80 points. It's just a starting place, right? What's an example of how a trader like yourself uses these numbers?
Well, and that's a great question because, okay, 81 points. Do I go from the previous day's close? Because the markets have been trading for 9 hours.
Sure.
Or do I go from where we are right now before the event risk, whether it's unemployment or whatever?
Yeah.
Is there any right answer to that? No.
No.
I think you look at if you've centered up in the middle of the range, that answers your question for you. If you're 40, 50 points higher, it's a little bit different exercise. But for me, this is what I love about this is, okay, on a normal day, if we're getting Trump tariff or dollar weakness, bond strength, we get 80 pips on either side of a reasonable middle point from yesterday. There's some interest for me being a contrarian. If it's a binary event risk, non-farm payrolls, whatever.
Canadian unemployment.
Right.
Yeah.
Now, not the tariff stuff, because you don't know when that's coming out. I take that number, depends how aggressive I want to be, and maybe I'm looking for, I want to sell dollar Canada because it's had such a run-up. I may take 1.5 times that number, but I'll use 2 times that number on the downside.
Of course, yeah.
And it's as easy as that. So you've got the core number, how you tweak it, rather than thinking, okay, where do I even start? And then the proclivity is to go back and draw lines on the chart. And I'll tell you, if lines work,
hard.
use it.
It's really hard.
This is far better mechanics.
Well, for day trading and
do.
for scalping, this is a great place to start.
Absolutely. And we will continue to deliver more and more. This is, and I need to be careful when I say that, this is actionable trading intelligence. Me drawing a line, a cup and a handle, a doji star, or any of the other stuff. And I'm not bad wrapping technicians. This is useful as a trader.
Well, you have to give in at some point to the fact that all these markets are truly random, and all you can hope to do is be informed about them
And this is telling
go
me,
from there.
Yeah, this is telling me 20, almost a third of the time I'm going to be wrong.
Yeah.
It's going to continue to go.
Yeah, exactly.
But if the world lives on 50-50 bets,
It's a nice piece of edge.
that's a nice piece of edge.
And the last thing that I'll say is that it also is the great equalizer, to Pete's point. Not only if I want to trade multiple markets within an asset class, but outside of asset classes, but also right now, you've got a commodity currency market. Let's take a look at that. Aussie only moving around 30 points. Kiwi only moving around 30 points. And their commodity currency brother, Canada, moving double, almost triple that. And so you got to stay tuned to these things, because to your earliest point, Pete, every market is not the same. Every market from week to week is not the same. And so it really is the great equalizer to let you know, okay, euro dollar, the opportunity's around 40, 50 points. But for, Japanese yen, it's closer to 100 points. So it's interesting.
You look at this, the New Zealand and Aussie numbers are 30 basis points. There's not a lot to do with that.
Mm-hmm.
There is, if you have an opinion and you want to buy, Aussie continues to be on sale, irrespective of what's going on, which is a little problematic from a tape action. It really hasn't been able to hold on to a good bottom. But if you want to pick it up cheap, and month-end flows give you a 60 pip downdraft, 2 times the standard daily range, still a tight range, but you can use it for that.
It's abnormal. It's an outlier. It's something to look at. But that'll do it for today's episode.